Hey everybody, this is Grateful Futures here. What if you could identify the exact prices where buyers and sellers are most aggressively competing and use those levels to find explosive moves like these? Now, these moves aren't based on moving averages, they're not Fibonacci levels, and they aren't random support and resistance zones. They're created by combining a new tool I want to teach you guys, the Anchored VWAP, with volume profile to identify areas where the highest concentration of buying and selling pressure collides. When price reaches these areas, the market often has to make a decision, either break out with the momentum or reinforce the current trend. To understand why these levels are so powerful, we first need to understand the anchored VWAP. Unlike a standard VWAP that resets every session, an anchored VWAP begins from a significant pivot point, allowing us to calculate the true volume weighted average price of an entire trend. That gives us a much clearer picture of where participants have accumulated positions overall and where institutions are most likely to defend or abandon them. Now, let's start with the basics. I'm going to start on a daily SPY chart because the first way I want to show you guys how to use this is to identify if a bull market is still valid and whether it is searching for higher prices using ways other than volume profile. So what I have on the chart here is my daily chart of SPY, and this is an anchored VWAP. Now, if you're on TradingView, you can go to your forecast and measuring tools, and the anchored VWAP is going to be over here in your volume-based analysis. So I'm going to go ahead and just show you guys how to use this. I click on the anchored VWAP, and I am going to anchor it to the start of our previous bull market, kind of like what I do with volume profile. I always start it with the start of a new trend. So if I click here, I'm going to show you, this is just a simple anchored VWAP. If we are using it on a daily chart or a long-term analysis, I do like to include the standard deviations. So I would go over to my settings. I'm going to click on my lower and upper band, and I like to make them blue personally. I don't know why, it's your preference. Blue's my favorite color. But I'm going to click OK. Now, this green line here in the middle, that is our volume weighted average price of all the trading in this trend. Now, you might notice some things here, right? So the blue line, our standard deviation band, is what I like to, this may sound a little empirical, but if price is above the upper standard deviation band, then price is actively searching higher. I call this discovery mode. Now you can see that price pretty much when it comes to test that upper deviation band, it acts as great support. We come back, test it again, and keep moving up. We tested it here, which actually ended up being a low volume node. If you watched my last video, we know that's also a powerful demand zone. But when price breaks through it and retests it from bottom, it's a resistance, and now price is actively searching lower. So we look to our next zone here, which is our low volume node gap, and price bounces. Again, it rejects under that standard deviation band. The general rule is if it can't hold above the standard deviation band, likely we are searching lower, and it eventually comes down. Where does it come down to? Exactly to that anchored VWAP, and we get a pop off of that level. Again, resistance here at the standard deviation band, and we move lower. Now, this is not typical of just this past bull market. Let's go ahead and look at some previous bull markets, and then we will get into some other assets as well to show you how to use this a little better and use it in combination with your volume profile. So let's check out the last bull market just to see if this is something that's valid through time. So I'm going to go ahead and put that on. You can see that initially, you may have some volatility at the start of your new bull market. That's pretty typical where buying and selling is really aggressive. But once price holds above that standard deviation band, you can see right here, we have a really nice hammer candle right off of it. Price is searching higher. We get a pullback right to that standard deviation band. Price is actively searching higher. Price pulls back in under the standard deviation band, but it is immediately shot back up. And we have this repeated motion of tapping off of this upper standard deviation band until we get below it, hold below it, reject it. Where do we move back to? The general area of our anchored VWAP, which begins our new bull market. And this, you can go ahead and look in this. This is, pretty valid through time. Sometimes it's not exact, right? But let's look at one more example just to show you guys. This was the post quantitative easing of COVID, and this was our low. So if I click it on there, right, a little volatility, we have some support off of it right here, a little volatility, it tries to hold above that standard deviation band, but ultimately pulls back down. And you can think of these as levels, right? If one breaks, it's probably going to go to the next one. If it gets above that level, that one's going to be support. The standard deviation band should be resistance until it gets above it, and so on. But we notice that eventually it does hold above that standard deviation band and moves up. And until we get this next pullback, we have kind of a cup and handle forming right here. When we break down below, it rejects this standard deviation band, comes all the way down to our anchored VWAP, and that's where we get the start of our next bull cycle. So, and because that tested it, it can actually become the start of a new anchor point. And you can see eventually this one does break and it comes kind of down to the general area of that one. But let me just pull a new one up for where we had the test of our anchored VWAP. And it is valid as well for the new bull cycle. So we do get a little bit of breakdown below and kind of a rejection there, but it immediately pulls back up. So if it does come back up above the standard deviation band, you can assume that we're probably searching higher for the meantime. Now, eventually, right, we can see we have a rejection of that upper standard deviation band, and this was an extreme time of selling pressure from the tariff announcement, but these levels still hold, right? If the anchored VWAP of the last cycle breaks, then it's coming down to the lower standard deviation band of that cycle, which is the general area of our main anchored VWAP from our low back here. So this is an area of extreme value. That's why it was getting bought up heavily, and it became the start of our next bull cycle. So that's what I want to show you guys on the daily chart, and this is valid on lots of different assets. Let's just go ahead just for giggles. Let's look at NASDAQ for my NASDAQ traders. So this is our previous start of our bull cycle, and you can see the constant hold above that standard deviation band, the test of the general area of our AVWAP, and so on. So let's go ahead and look at a different asset now. Let's look at maybe a Forex market. So let's look at, just to pick one randomly, the US dollar versus the Canadian dollar. Now, I'm not a really big Forex guy, but I do want to show you guys this briefly and how to use it in a different way. Now, I don't want you guys to go crazy drawing lines all over your chart everywhere, but I do think it's important to show you guys how I would use this. So let's just get rid of this volume profile. We can see we have a definitive start of a new bull cycle right here. So I would put my long-term anchored VWAP to that low, and you can see it's pretty valid still. We have a pop off of the lower deviation band. Once we get above the upper deviation band, we are actively searching higher, and you could have just longed this every single time we came down and tested the upper deviation band. It holds above it, tests it right here, and it constantly moves higher. Now, let's go ahead and look at the volume profile of this, and just to show you what could be some good trades if we were in some recent action on the USD versus Canadian dollar. We have this upper consolidation area. That range is, let's pull up a volume profile of it, maybe just from right here. So we have this upper trading range, this heavy volume area up here, and we have the start of, really right now, this is kind of like a huge low volume node area from this gap up, or this quick liquidity push up. So we have kind of a big low volume node area and then a large trading range up here. So what I want you to also do sometimes is when you have, let's say we're right here, the start of a potential new bear cycle. We have multiple tops here, a lower high. Let's go ahead and draw a individual, just the anchored VWAP right here, and I'm not going to include the standard deviation bands this time because it can get a little messy on your chart. I only use the standard deviation bands if it's a long-term trend. Now, you can kind of notice something once I post it to this high, right? Price gets under that and starts riding it down. What does that tell you, right? So from the sellers that started selling at this pivot high, this is their average, their volume weighted average price. That's kind of like a baseline, an average for all of the market participants from that pivot. Now, this is kind of competing trends, right? We have our long-term discovery, which we're technically still above, and we have this new downtrend. These two trends are competing. So you can see that price is respecting the downtrend VWAP, and eventually it's coming down to what's our next volume level down there, or below. It's our standard deviation band of the long-term trend. Does that match up with any volume profile level? Yes, it's the start of our low volume node gap right here. So you can see it tries to respect it, but ultimately it is still respecting that downtrend, respects it again, and then we do have a break below and a push down through our low volume node gap. So this tells me that ultimately when you see that break, that our downtrend is still valid and we are searching lower for buy side liquidity. What is the area below that, right? We have two trading ranges, one right here, and then we have another trading range right here. This is that volume area. Let's make that a different color. So, right, there's a bunch of buyers that were right here trying to go higher, and likely, these are different trading ranges. If you guys have seen my other videos, these volume peaks represent areas of ranges of trade. Now, when you see price enter that area, we have kind of a multi-drive here, right? Buyers are now, it's not in free fall anymore. Buyers are slowing down or providing stopping volume to this trend. And ultimately, we have price push back up. Now, let's go ahead and pull our volume profile forward to see what it would look like a little bit later. So we have, because of this volume that was right here, we have to tighten up our low volume nodes to roughly about right there. And now, uh, excuse me, what I want to introduce quickly, and I don't want to do too much in this video, but when we have a change of trend is when it's important to put these anchored VWAPs. That's when they come into play. So we have a trend that's starting a downtrend right here, but we also have a change of pace right here as well, significant change of pace. So I can also put my anchored VWAP at the start of that change of pace. And you can see that the sellers that were aggressively coming into the market right here, they are adding to their positions at when the price comes back up to that downtrend anchored VWAP. Now, a couple things I want to show you guys. This is what I call a volume choke point. When two of these anchored VWAP components, one from a buy side and one from a sell side, collide. The first one I want to mention is this one right here. We have our long-term bullish standard deviation band, and we also have the start of our acceleration downward. So those two meet right here, and you can see the kind of aggressive push we got down from there, validating the downtrend from that point right there. You could have taken pretty confident shorts at this to go through the low volume node right here. Now the other one I want to show you is the start of a new uptrend. So let's put a new one right here. We have probably, I would be about like right here where I would suspect maybe this is a new uptrend. Let's make this green, and we can see clearly another volume choke point right here where we have the anchored VWAP of this aggressive downtrend meeting with the bullish anchored VWAP of this new suspected uptrend. That creates, and let's, yeah, that's probably fine. That creates a competing trend, right? We have our volume weighted average prices of an uptrend colliding with a downtrend. Because we're above that and retracing into it, you have to suspect that this is going to be bullish until it breaks through that level. Because we have a nice hammer candle off of that level, you could feel pretty confident in taking longs up to our next volume level, which is our downtrend, our larger downtrend from this downtrend cycle right here. So this would be a great trade you could have taken off of this volume choke point, pushing into that uh, downtrend anchored VWAP. Now, if we were to, let's say we were in this trade, obviously we are going to have an updated volume profile of about that. And that's still pretty much our low volume node. It could be probably tightened a little bit too right here. So you can't suspect that this is going to break higher and just go into this upper trading range. Likely there is traders that are in here or institutions that are in here that might want to get out of their positions, especially if they're partaking in this downtrend. So that's why I would have targeted no higher than this. And we do get a kind of a push down off of that to our downtrend VWAP right here, which you can see is supported. Basically, sellers that were selling down into this are now letting go of their positions roughly at that downtrend anchored VWAP, and we have this kind of squeezing effect between these two anchored VWAPs. And price pushes up and tries to actually get into this trading range, but it is, like I mentioned, rejected until we get a rejection of the overall downtrend VWAP, and we break through pretty much both of these um, buy and sell VWAPs. If it's been broken multiple times, I don't keep it on my chart unless it's a long-term trend. I just think it can be a little bit messy on your charts. But this is kind of how you compare and add volume profile into your anchored VWAP. So let's look at one more asset because I know I look at SPY a lot, but let's look at uh, the Russell. I know a lot of people do trade RTY, which is like your Russell futures contract. Let's look at it in terms of anchored VWAP and volume profile to see if we can see anything of value here that we can kind of say, hey, this would have been a great trade in the moment. So coming off of this bearish cycle, we have this higher low, we have a push up. You can suspect potentially this is going to be the start of a new uptrend. So I anchor my long-term anchored VWAP to this pivot low right here. And you can see it supports it a little bit, supports it a little bit. We get this pop up and it holds above our standard deviation band. Overall, this is, a valid trend of searching higher. Now, let's combine this with volume profile for a second, right? So let's say we are maybe in somewhere in this consolidation right here. We know that our first standard deviation band is going to be our definitive boundary of whether price is continuing to search higher or not. Let's pull up a volume profile from this pivot low to the pivot high. So that's what our volume profile would look like. If we are in this consolidation right here, we see it supporting that standard deviation band. You could take longs at that standard deviation band. You would have had some good trades off of that, but ultimately it does break down lower. Now we have a rejection right here, which is, this whole consolidation. Let's put it on a square just so you guys can visualize it. So roughly about right there. So price breaks lower. Now, instead of it just kind of continuing in this consolidation, now we have a rejection of it and it pushes down lower. What is the next volume area lower that this would be pulling back into? It's our previous point of control. So when price pushes into that, we can see some wicks off that level. Buyers are starting to come into this. And when you see it push up right there, you can feel pretty confident to take longs off of that. Let's look at, let's just look to see what a anchored VWAP would look like. So from this pivot low right here where we started our volume profile. So you get support off it right there. That brings us back above our standard deviation band. That's actually exactly where we pulled down to, but ultimately it does fail through that and comes down to our point of control of this recent consolidation here. Let's go ahead and look now, since we suspect this is potentially a new uptrend, let's look at our anchored VWAP from right there. Now, this is kind of interesting to me because we have a volume choke point in this area right here. Now, let's also update our volume profile, what it would look like if we were, let's say, right here. So now we have a region with multiple different volume levels going into one area, right? We have our long-term standard deviation uptrend band. We have our recent anchored VWAP uptrend, and we also have let's actually make this to look what it would look like for this whole uptrend right here. We have the point of control of all of this trading right at this level right here. So we have a point of control. We have two different components of a long-term and a shorter term uptrend anchored VWAP, all in this one area right here. So this is a powerful support now, right? We have multiple uptrend anchored VWAPs. We have a point of control all in this one area. And you can see the kind of move that we got up off of that level, right? If you see buying here, price coming up out of that area, you can be pretty confident to take this aggressively long. Just maybe trailing your stop because this is going into all-time high zone. But that's how I want to show you to combine these different volume techniques to get areas of very, very, very strong support or resistance. Now, let's go ahead and look at a little bit more recent action on the Russell. Let's go ahead and look at what actually happened in recent history. So, and then also you can see eventually we did get a breakdown all the way down to our long-term anchored VWAP of this entire uptrend from where we had pretty aggressive move up. Like that day would have been crazy to go long. And this actually ended up going back to all-time highs. And because that was the start of a new trend, right? Because we had our test of our anchored VWAP, let's put a anchored VWAP right there. I'm going to delete this one just so there's not too much on the chart. And let's update our volume profile. So, okay, so we have a couple different areas we can look at. We have a low volume node right here. Right there. Okay, and we have a bullish anchored VWAP right here. And then now because you can see at this point, let's say we are right here, this is a potentially a new trend, a new downtrend potentially. We have two fighting trends right here. I'm going to make that red. So you can see, you can kind of visualize the squeezing action of the sellers selling up at this downtrend anchored VWAP, and then you can see that buyers are trying to support this uptrend VWAP right here, which is also our low volume node. So you could have honestly just taken this up and down both ways, right? If you come into our low volume node and anchored VWAP, you could have longed. When you got to this sell side anchored VWAP, you could have shorted, and kind of you see how price is squeezing between both of these until we get a break lower. It actually comes up to retest our sell side anchored VWAP one more time, and we get a aggressive push down, which is now rejecting that buy side anchored VWAP. So I suspect that the Russell might be coming down lower potentially unless we can retake that. So that's how I wanted to show you guys this. I'm going to do more videos about this later. And also this was kind of a support of our long-term point of control right here. So that would have been pretty good to long off of that level. That's what I wanted to show you guys. I'm going to do more videos about this later. One word of advice is don't go too crazy with these. Look at the more long-term trends to understand if price is currently trending. It can give you an idea of how you should be biased, but don't draw way too many of these on your chart. Otherwise, it could confuse you, right? Look at the most recent and most important pivot locations to anchor these two and use it in combination with your volume profile to get a full idea of what buyers and sellers are doing. Again, more videos coming on this topic in the future. This is something that could be a whole course in itself. If you guys want to hop into my Discord, I have a free Discord that I give daily market analysis. We have great discussions about volume-based methods and other methods. Great community in there. The link is in the bio if you guys want to join. And as always, guys, happy trading.